Alrighty. Good morning, everyone. My name's Katie. I am from Boomerang Labs. I'm very excited to see you all today and to be joined by Nick Gonios, who's going to be leading our webinar today. Nick is the founder and CEO of Circulist, and he's going to share with us today the 7 untold truths when raising capital and growing your circular venture. Before we get into that, just wanted to firstly pay our respects to the Indigenous people on this call and around Australia. We acknowledge the traditional custodians of the various lands in which we all work and live today. For me, that's the Wanneroo people. A quick, background on who we are, just in case this is your first time you've bumped into Boomerang Labs, but we're Australia's first circular economy accelerator. We provide services for startups and innovators in this space, all the way through from initial ideation through to launch and then eventual commercialization and growth. We do this in a whole lot of ways in our various different programs. Our base camp, which we have applications open for at the moment, our boot camp, which is for our early stage startups, through to our accelerator, which is our flagship 6-month program for those later stage circular startups. So today is one of our events that we hold as part of building a circular economy ecosystem. And we're really lucky to be able to draw from an expert group of mentors, including Nick that's joining us today. So a shameless plug from me to get started is about our circular economy startup base camp that, as I mentioned, we have applications open for today and open up until this Sunday end of day. I'll be checking my emails that night for last minute applications. So in a nutshell, it's a 6-week program. It'll take you from that initial ideation to startup launch. So unlike our other programs that are for established startups, this one's for if you just have a business idea, you want to see if it has legs, or perhaps you don't even have a business idea, but you're really interested in exploring this entrepreneurialism and this space of startups. This is our first webinar of our monthly webinar series this year. We're looking to have one on the first Thursday of every month. Just to save the date now, we've got one organised for next month. Mike Ritchie will be joining us from MRA Consulting, and we're going to be, excuse the pun, unscrunching the soft plastics market crisis. So we'll be going through, I'll give you some more details, and that'll be going live later today. So at the end of this webinar, I'll be sharing around a registration link. So without further ado, I'll pass over to Nick to introduce himself and get right into it.
Thanks, Caitlin. Okay, let's get in and try. And I've got disabled screen sharing. Caitlin,
right now, you should be good now.
I am good now. Okay. All right. All right. Can we all see that?
Great.
Cool. All right. So, all right, let's get started. It's going to be a bit of a cathartic process, sort of unpacking 30 years of lifelong journey and taking us through, basically the untold truths, as I call them, when it comes to raising capital and also growing circular ventures. So I'm going to take you through what I plan to cover today is sort of, the current economic climate, my backstory to get us to this point and why, and these 7 untold truths, and ultimately a Q&A, and really want this to be interactive. I don't want this to be a one-to-many. Having said that, Caitlin's going to control the conversation in some way in terms of mute, but going through that process, I'd love us to have a really good, insightful chat and conversation about a lot of these different things. So let's get straight into it. So where are we today? So the current investment landscape, based on I've been 30 years in the tech sector, and I have actually experienced 3 tech winters, as they're called, in these downside market forces and market changes. The first one being during the dot-com days, where we saw some massive layoffs. Funny enough, what we're seeing at the moment, we're seeing massive hits in the financial markets. And back in the day, the internet was sort of opening up a whole new Pandora's box of opportunity as we now experience it in terms of being mainstream. The second was GFC, and the current one that we're experiencing right now, which is impacting and sort of is our very third tech winter that we're seeing. The public markets have seen a 50% plus drop in SaaS company valuations. If some of them have hit 75%, many are possibly going to go bust, even the public markets, and that's actually brought challenges into the private markets as well. Challenges, I would say, probably reevaluation to some better norms, but we're experiencing my third tech winter, but a tech winter it is. It is actually reflected upon what's happening in sort of clean tech and climate tech as well, and circular economy in that sort of space. The reality is sort of the second uprising that we're experiencing, because there was a massive clean tech crash over 10 to 12 years ago, which saw a lot of fast-paced clean tech companies in 1.0 basically blow up due to lack of funding and availability of funds, and a lot of deployment of government money being sort of deployed. Funny enough, SpaceX, Tesla, and several other big brands actually came about because of the clean tech crash and government funds being allocated to them as part of growth and commercialization. The other big reality we have right now is, we got high inflation, high interest rates, and growing, and a lot of crazy money being deployed in terms of this big transformational shift that we're going through into clean, green, clean, net zero government funding. We've seen the European Union announce the Green Deal industry plan today. We've had the US government announce the Inflation Reduction Act, which has got so much. It's like a $1.2 trillion fund with a few $100 billion allocated in capital for energy transition and decarbonization. And it's amazing and exciting to see what's happening in our part of the world with the net reconstruction fund being formed. Hopefully it could emulate what the Clean Energy Finance Corporation has been successfully able to do independently of the government, and so forth, and many other funds and access to funds. Having said that, we do have some major challenges in Australia, how funds are being deployed and made available, and we'll go through a lot of this soon. So my background, as I said, over 30 years. I can't believe it's been 30 years already. But I've sort of cut through the whole technology sector. I've come at it. I wanted to be an industrial designer and an architect as a teenager, the same age as my boys are right now. And I fell into computing by accident, and have been in that sort of sector for 25 or so years, and have raised, probably directly raised close to about $100 million in direct investments and ventures, and another 150 to 200 indirectly in the angel network and the community that I'm involved with, and scale-ups that I'm involved with as well. Deeply passionate about sort of circularity and shifted towards a better future in that sense. And what I'm now trying to do is bring those two worlds together. And I'm super excited with Circulist, with what we're doing. We're on a mission to try and reimagine a new operating model. So with that in mind, and my background, I did have a point in time about 10 or 12 years ago, in 2012 actually, where I tried to bring to life what I'd call the Smooth Design Ventures group. And it was going to be Australia's first product design ventures group. I wrote a great little piece about a few weeks ago recently, and it's on Medium and it's on my LinkedIn profile, just articulating how I got to this point and the challenges that were experienced. But in 2012, still sort of dealing with post-GFC environment, tried to raise $10 million to build out Smooth as a product-led design organization, as a venture building organization here in Australia. And after a year of hard work and effort, did not proceed. And the reality is we have a lack of, back in the day, and I think we do still have a lack of belief and intent. I think that's changing when it comes to hardware-related stuff, hardware-related ventures. It's easily to actually, we have been able to gravitate and we basically gravitated to, I wouldn't say to a form of complacency, but dealing with stuff that we can easily compare and dissect. And that for me, sort of software and SaaS companies and digital and marketplaces and the like, but dealing with hard ventures, dealing with new product execution, basically back in the day and still now, I think is a massive opportunity. And I believe there is a second coming. And with what's going on at our local market, I think the timing is right. So with that note, I just wanted to unpack sort of the broad spectrum of capital types and funds that exist. And sorry, something's coming here, hang on. So what do we need to understand? I'm not too sure if you've seen sort of and understand the TRL sort of framework that exists when it comes to science, research and innovation activities. We have these 4 different areas: ideation, incubation, development, pre-commercialization, commercialization and scaling, and internationalization. And the TRL layers are associated to each one of these different areas at high level. But the bottom half is something to be understood. And I think this is all about understanding and getting clarity around context, where different organizations play a specific role as part of that journey to serve and help grow your organizational needs. But it's critically important to understand where they fit and where they have alignment to what you're doing. And if there is a natural mismatch, you need to be aware of that. Sometimes a lot of people going naively, not knowing and understanding the context of how these organizations operate and what they're driven by, and ultimately waste a lot of time just having a lot of conversations. So I hope this one-page slides gives you some clarity on how to sort of look at the market and where it sits based on your development and commercialization, internationalization journey. But if we look at the bottom end of this, we've got venture builders, we've got incubators, maker spaces, and accelerators and challengers. Boomerang Labs sits in this left-hand side here, supporting a very specific niche of our circular economy area. There are many other accelerators, incubators that are trying to tackle different problem statements or thematics that are required. We have also, from a government local perspective, we have our CRCs and our growth centers in the past that drove amplifying sort of our messages and success stories. But when it comes to funding, we've had ultimately seed funding, crowdfunding in terms of the highest risk area, and early stage funding in government for grants that are high risk as well, which are required. But you need to understand, and I'll go and unpack some of these in the Untold Truths, what their expectations are and outcomes versus what you may perceive of them, and that in sort of your view of the world. There are growth partners. There is unfortunately lack of clarity on sort of young innovators and entrepreneurs and company builders that see venture capital as one of the same. It isn't. Their venture capital is one stage. You should be aware of the fact that there is also growth capital stages, which is sort of the next stage of early stage venture capital. And then ultimately, if you're successful enough to internationalize and get ready for an IPO, there is the category of crossover funds that exist that prepare you for IPO and take it to that sort of next frontier. And then we've had many organizations that have done that. A common untold truth that actually it's not part of my 7 is it's a big mistake in Australia to actually go public is as your last form of capital raising when you're not ready for the public market. Massive no-no from my point of view, and I experienced this firsthand running 8Comming, a public listed software company about 6 to 7 years ago. We can talk about that later. But this is the high-level snapshot of capital types and funds. And the reality is, from a circular economy point of view, we have massive... the circular economy is underserved in terms of financing and capital and resources across this whole spectrum. And secondly, I believe there's too much focus and attention on recycling and resources management versus building closed loop system companies. And we can talk about that later as well. But this is the general landscape and the framework. So let's go straight into the 7 untold truths. So These are observations, learnings. I would call it some of my wisdom, and unpacking some of that that I want to share with you all today. And these are my perspective, based on a company, as a natural entrepreneur, a company builder, having gone through the challenges of two failed startups, raising a lot of money and burning a lot of money, and doing really well with a couple of others, and running a public listed software company, and investing and advising many dozens of other organizations. These are 7 untold truths that I'd like to share with you all now, and looking forward to having a good discussion about them. So, number 1 for me, and first untold truth, is that $1 of money is never the same. What does that actually mean? So you'd say to me, well, we just raised $1 million of debt. We just raised, so let's take that, unpack the $1 million of debt. $1 million of debt in Australian terms, with our banking structure and the way that it operates, means you need to collateralize your home that you may or may not have in these interesting times, or collateralize, as I would say to people who know me, my third son that I don't know exists because I've only got 2, and basically, get indebted with collateralization. And it's one of our big challenges in Australia, is we don't have strong commercial bank sector that actually helps young budding entrepreneurs to actually build out hard problems in terms of their enterprising nature. The other perspective is that $1 of money from venture or early stage means that you're diluting your equity position. Not negotiating the right deal early on sets you up failure for the next 2 or 3 rounds of funding, when you get caught in the trap of actually not respecting your shareholders' agreement and the board that you've actually established. These are fundamentally important. Giving away, taking on a little bit of money at the beginning and opening up your door to an external investor really unpacks a whole new dimension and complexity that you need to understand. And the other area is actually, bringing on grant money requires, as many of you sure know in these local market, a lot of time and effort required, taking you away from actually building your business and building your company. So the first untold truth is actually $1 of money is never the same. Never treat it that way. It never should be. The second untold truth, and this is probably a little bit, I wouldn't say controversial, but just my view and reality of the world. There are many people out there calling themselves angels. There are many people wanting to support our young entrepreneurial people wanting to on a path to get them to building amazing things. But unfortunately, in local markets here, we've got a lot of angel investors who actually invest with the mentality of investing in small businesses that are digital first or product led, or whatever else might be. And the reality is that the other side of the equation is that in building true startups that are going after true untold, unknown spaces, they come with very high risk. You need to be, as an angel, to be deploying capital. You need to be accepting the fact that you're going to lose that money, and all that time and effort contributed towards building and assisting that organization, if you are active, has the potential to be wiped away. And we are experiencing this right now when it comes to the downturn in the market right now. And I expect, and based on my view on the market, is that we'll probably see it turn around by early to mid 2025 is what the prediction is, which means we've got another 2 years of hardship coming through, and it all sort of for this untold truth means, again, don't get caught in the trap of accepting capital from people who don't actually understand the risk appetite of the startup that you're looking at building. And it's one of the most important points for me is that they need to come with that acceptance that it will disappear, has the potential to disappear, and it isn't a small business. So small businesses are comparative in nature. You can compare them. You can see what's happening in market. Fundamentally, startups, in terms of getting clarity on the definition, is, from my point of view, is they're validating a new behavior change or capability in market that doesn't exist yet. The third one is, what stage of an investor's fund is being invested? And this is not well understood. Most funds have a particular lifespan of 7 to 10 years, unless they are evergreen, and we can talk about what the evergreen term means. But most investment funds have a lifespan of when they need to basically return capital, hopefully plus some proceeds, back to their limited partners and to the investors of those funds. And understanding at what stage and what fund they're actually deploying capital into, if you actually have a position to receive a term sheet from an investor or investment group, is super critical. Understanding that if you are the first, so typically in a fund, there are probably 9 to 12 investments at a particular fund, if it's a portfolio-based approach in early stage. And if they have tens of millions of dollars, if not hundreds of millions of dollars allocated, their first few investments and bets will actually set the scene on what their mid to late stage investors will do. They'll take probably about 2 to 4 years to deploy that capital and really try their best to contribute as much as possible to adding value to the organization's challenges and growth and opportunities that come about. Early stage is probably best to come in and versus mid to late. Late stage, sometimes investors, depending on how they see their fund is going, even within the first 2 to 3 years, it's human nature. They actually do get a little bit more risk averse in terms of making sure that they actually do apply some form of a return. And therefore, being a later stage investment in that fund makes it possibly a slightly more difficult from one point of view, depending on the nature of that fund and investment committee. Or on the flip side, it opens up an opportunity for you to clearly differentiate. What I have seen in the past as well is investments made in later stage of that fund that are associated with associated with with an investment that has got a long brand value or association. It's a great logo doing great things, which actually sets up the narrative for the next investment fund for that investment group. So be aware of the fact, if you are late stage potential in joining that portfolio, and you have got a great story, great. It means you also are going to be marketed for the next round of capital raising. They're looking with their next round of funding. So respect the stage of where the investment fund is coming from, is the third untold truth. The fourth one is, it is very, very, very difficult. And when it comes to circular economy as well, this is very, very important to understand. And based on my own deep experiences, it's driving new behavior change is so much harder to validate and scale than it is to basically just roll out a copycat play in terms of an existing market that already is being served by other competitors, right? So in Australia, we're net takers, you would say, of new behavior change or new behaviors in market. And that's something that we greatly want to try and change going forward for our next 1 to 2 or 3 generations to come. But the reality is, building new behaviors in market, new business models, new categories is way expensive. It's at least 10 times more expensive to build. It's 5 times longer to basically gain traction and scale those out. And actually becoming the category leader is a whole go-to-market discipline and capability that we need to start building in Australia, from my point of view, in order to seriously punch above our weight, because we lack ambition. We need more ambition, from my point of view. And so through personal experience, I've had 2 or 3 new behavior change ventures that I'd taken to market. And what I recognized was that if I was doing this and building the same venture in another part of the world, where behavior change is actually accepted more than it is in Australia, it may have been another trajectory that would have had with any one of those ventures. So be mindful of building new behaviors. Takes a long time to execute and needs a lot of money to go after. It means you need to raise a lot of money, and you need to basically have conviction that you're going to take a long time to get traction and validation. The fifth one is, and just looking at time at the moment, looking good. Finding your lead investor fast is key to capital raising, right? So, it is well said that you need to lead to kiss a lot of frogs to get to the right one, to get to the prince, as they say, or princess. It is key in this situation that you have a very open and frank conversation with prospective investors early on where they stand when it comes to leading the investment opportunity and leading the capital raising round. And what does that mean? It basically means they're going to do all the legwork. They're going to do all that hard work to actually do a lot of due diligence on where you're at, what you're raising, what your team looks like, what is the market opportunity, where are the risks, what is the founder alignment like, and so forth. So there'll be a lot of sort of both quantitative and qualitative sort of due diligence that should be done. You should expect it. If they're not doing that, it's a big flag from my point of view. But that's a lot of effort that needs to go in from one organization or individual or syndicate. And finding that and asking for that as quickly as possible is very important. There'll be a lot of investors that will actually lead after that is actually, follow after that actually occurs. And you need to continue to nurture and foster those, but having clarity as quickly as possible with who's going to be your lead investor, who's going to do all your due diligence to basically set up for a faster capital raising is key. And I strongly recommend in a circular economy context, you may have to start considering global investment groups with a global footprint in mind, recognizing that we're in this part of the world, which is going to lead to a point that I will share later on. But do not close yourselves off to trying to raise capital, from my point of view, in this part of the world, from a point of finding the right lead investor. The sixth untold truth is, this is very, very important. That's a lot of lessons learned on my part, and have a lot of respect for it now, is solving customer, consumer or business problems is fundamentally the objective versus building single product businesses, right? Most often when you ask customers or businesses the problems that they're dealing with, it typically is not solved with one product. Right? It's not solved with one product. It's actually usually a combination of multiple different product systems, behaviors, go-to-market activities, engagement processes to work with them, and trying to achieve a common outcome is sort of the answer and the solution they're looking for. And so the point here is that tackling problems in market does not mean it can be solved with a particular product. And we have many examples in Australia right now where we are trying to solve circular economy problems, and unfortunately we're leading with actual products and not solving for the closed loop system that's required to actually enable products. And a great example is, how do we go after executing product as a service ventures where we shift from ownership to usership? We actually lead to deploy and be responsible for the infrastructure to enable us to execute on that closed loop model. And unfortunately, it's tied together between having the capital, resources, team, and capabilities in place to make that happen. So you need to consider going after raising a serious amount of money, or going after having strong conviction of the bigger problem that you're trying to solve, because ultimately it's going to catch up with you if you are going to build just a product-based product and it becomes your business. And happy to elaborate more on that and probably in Q&A. But it's lessons learned on my part, focusing on a single product business or products-based businesses ultimately aren't solving the ultimate outcome that your customer or market's looking for. The seventh one for me is fundamentally important, again, as a lesson. Sometimes we get caught in the trap of trying to drive early stage growth via partnerships. I found this in working with a lot of young startups and founders and teams in general, and including myself. I've caught in the trap with the second venture I was involved with, where we let ourselves go to actually have our partners roll out and dictate the product roadmap for the product that we're building in market. And unfortunately, it took us away from the fundamental challenge that we were ultimately trying to solve for. And there's a very, very important saying that you should all be aware of, that he who is closest to the customer always wins. And in the early days, and even in early days of commercialization and growth, it's critical. It's so critical that you are focused exclusively of engaging directly with customers and getting as much of a fast feedback loop from them on what you're taking to market, and iterating and changing and taking things and improving things going forward in order to drive better value and serving them as best as you can. When you're actually building partnerships, you're always going to be indirect. You're always going to be one product in a bag of many, as I say. And the challenge with that, unless it's a joint venture and there is clarity around how the partner is going to compensate and build and be accountable for your business's success in market, it will not, you will be disappointed, is the point. So why don't, the seventh untold truth for me is very much, you need to lead directly into market. And for many people, this is a big challenge because they aren't naturally oriented to go direct to market. They don't have a natural sales and marketing tendency about them. It's personality-wise, it might be, whatever it might be the case. But if you go in and lead with conviction, go in and leading with a problem and engage with people solving real problems in market, this is the best way to actually execute in market and not be leading with partnerships as to drive your growth. For me, that's a big red flag. And I've also thrown in a bonus one. And this for me is, again, something that I've realized in the last few years, and which has been, unfortunately, most organizations, they just do marketing, and they do marketing to capture existing market demand. And what is not well understood with this when it comes to growth execution is that capturing existing demand is one thing, but it ultimately becomes a zero-sum game because you're competing with every single other product in that same category at the same time, with more capital, with more resources, with more brand value association and the like, and it ultimately becomes a zero-sum game. So what must we do? We must actually start to build our own audiences, with our own differentiated point of view into market in order to create long-term value creation. There's an amazing media effectiveness case report that I have that articulates that most organizations should be allocating 60-40 split in terms of marketing and growth spend, 60 amazingly on brand value development and differentiated point of view in market, and 40% on what they call below the line performance-based marketing to capture demand. The point here is, going to market, you need to do two things. You need to create new demand, therefore create a new audience that's directly engaging with your organization or your proposition, and then mechanize and build mechanics and systems to actually capture that demand. And we can go into some of that detail as well if you like, but that's a bonus one there. And I had so many more, but I had to sort of curate and cut them down to the 7 plus this one. And so, with that, I just wanted to share one important point to summarize, which, one thing that I find locally, we lack ambition. We need to lead with ambition as Australians, as proud Australians, going global, building amazing things. Having said that, with the context of circularity and circular economy, a lot of us may believe that because we live in a very distant part of the global north, let's say, or other parts of the world, it possibly is a detriment to us in terms of global supply chains, production, and so forth. And we are net takers of what the world produces and has created the negative externalities around recycling and waste and all those challenges that exist. And I believe that is the opportunity, and the opportunity is to really go knee deep and forward into trying to see how we can build an amazing country which is actually self-sufficient in serving our own needs, with a population of 26 million, I believe now, and growing in a very diverse geographic base, that if we can actually prove to ourselves we can actually build some amazing circularity-led ventures and economy, we can actually lead with that around the world and not just be dependent on looking what others are doing, especially the Europeans, now the US and North Americans sort of leading, sort of driving that narrative. And it's something that is really important to me on a personal level, is that I'd love to see more and more organizations and people drive with ambition and purpose for generations to come in our local market. So with that, I open up the Q&A, and Caitlin, there were, I think you've shared with me 4 or 5 already questions, and I've just basically I've shared them here, and I'll go about sort of unpacking them. I'm sure there'll be other questions as well as we go through this, but let me go through the first few of these. So, what are the challenges circular ventures face when raising capital that linear ventures don't? Hang on, let me have some drink here. Hang on. So much to be unpacked here, but we've only got so much time. Linear ventures, well, they operate in an existing world who basically
numbers and see if it makes sense.
Sorry. Yeah, so the challenges in this, from a circular ventures point of view, in raising capital, is that we are, the definition of circular economy, circular ventures, from my point of view, we need to be building closed loop systems. And the challenges that come with that is that we need to have finance and infrastructure that rapidly become available and to be deployed for us to build closed loop systems, and not just go about executing what we call circular economy product-based design companies, right? So linear ventures don't have this problem because they're stuck in a different world, and that actually, I can spend a lot of time talking about that, but the challenges, it's a formulative space. Raising capital in the linear side has already been proven. We can do things. Circular ventures are still an unknown entities. We're building a brand new complex an economy that sits around circularity. And the best we can do right now is to point to other examples of other organizations and investment groups that are doing sort of things as lighthouses and so forth, to demonstrate to others on what can be done, and actually continue building that narrative. So the second question is, what is the role of CE brokers, circular economy brokers, in this space, helping new startups source funding opportunities? This is critical. But the most important point I'd wanted to make here is that I think circular economy brokers, or CE brokers, need to understand the full spectrum of funding and resources and capabilities available, and not be just blindsided by grants and funding mechanism in the local market. It's a very, very important point that there's a self-serving cycle that I see locally, is that we seem to be highly dependent on waiting for government to do stuff, and wait for funds and CRC programs and different thematics. And what we need to be able to do is actually make sure that we're building out a very broad plethora of funding and capabilities and resources to help our startups, source funding opportunities, both here and most likely. So another question is, in which types of business models investors generally do not invest? Apart from scalability, what other features does a startup need to have to find investors? Well, what business models don't investors typically invest in? One that typically don't scale. Clearly, have a very, very small footprint, especially when you're in early stage. Unfortunately, they're expecting $1 billion or $10 billion types of market cap opportunities, and therefore go after high growth ventures, trying to execute on a particular differentiated pathway. The reality is, in early stage, you still don't know what your business model is. So it actually comes back to what stage of where you're at in your investment cycle and where your organization's at. Apart from scalability, what are the other features does a startup need to have to find investors? I think the most important thing for me, you probably wouldn't expect me to say this. It's actually founder alignment and founder team alignment, and having real clarity and conviction on the pathway that you're taking. Not having that, 50% of the time startups fail because there isn't founder alignment, isn't founder clarity on what direction the organization is trying to take, how much skin in the game everybody has. Life gets in the way sometimes. People get married, they have kids, or they change, they leave the country or do certain things, or knock on wood, things happen to us from a health point of view. And the reality is that we can't predict the future, and we need to be able to understand how we get founder alignment to actually and be able to have clarity on that, and being open and transparent with your investment prospective investors is an important aspect. And on the flip side, I think investors need to be aware that that is also being is formulated and happening along the way. So another one is, what are the best methods to find and attract investors? I strongly believe building an amazing story, building an amazing narrative. Again, building one of the lessons I've learned is building an early access program for prospective customers who want to become advocates to come and join you on the journey and start to use your products and systems that you're building in a paid for way. Having them paid for having a cohort of organizations paying their way to trying to solve some of their problems with what you're actually taking to market is the best way to attract investors from my point of view. Customer obsession and having real organizations come and spend real dollars with you along the way. Secondly, what comes with that is actually demonstrating it can be ultimately productized and scaled. But sometimes productizing at scale too early becomes what they call a premature scaling problem that bites you in the backside way too early on, and actually has the chance of killing your company or your startup. And last one that I received, Caitlin, was this one, which was the right and wrong times to raise capital. How to approach needing capital to build infrastructure that will make business profitable, lower costs due to economies of scale. Where to find appropriate investors for manufacturing infrastructure, R&D, heavy investments. The second question there, it's extremely difficult to find that type of capital for manufacturing infrastructure, R&D, heavy ventures in Australia, unless you're a proven brand with proven capabilities and a capital and a balance sheet to support it. There really isn't much at the moment in Australia. I think there's a whole discussion there on what it means with regards to what it means to manufacturing. I think there's a whole reimagining of what manufacturing is in our local market. And then the other perspective is to answer sort of the other question, which is the right and wrong times to raise capital. Great question for great point in time. We are going through, as I said, we're in a third tech winter or third sort of investment sort of winter, and is it the right time to be raising capital? Well, most likely not, I would say, unfortunately, and therefore forces me to say to everybody out there to get as close as possible to trying to solve problems with customers and having them support you on that journey. So build missionary, purpose-driven customers and a network of organizations that want to help you on that journey, who have capital and commitment and resource to execute and validate and mitigate a lot of those risks on the journey, is the only way forward from my point of view. And waiting, and the other part is waiting for what governments will do and deploy capital is a fool's game in my view, and it's critically important to be on the front foot. And the best way to do that is to engage and build customers and a customer base of passionate advocates helping you on their journey, solving their problems and outcomes is key. So that was the last question that I had received, Caitlin, and I'm just going to stop sharing now and share it back to you. Thanks, everybody.
Perfect. Thanks, Nick. I'll unspotlight you so you're free. We've already got a couple of questions in the chat, and I believe there was another last-minute registration, which I'll add to the chat too. But the first question was just if you wanted to talk a little bit more. You mentioned circular economy brokers. Were there any particular, organizations or actors, or maybe, emerging people in this field that would act in that role?
I think there are more in Europe at the moment than there are here. I think that it's an emerging trend that we'll see happen here, and it's also the term that does exist out there is sort of transition brokers, which we know from the great work that the Dutch are doing. Is sort of now being sort of rebranded or repositioned as sort of circular economy brokers. Brokers really means an opportunity to facilitate and lead a project or initiative or a venture in some way, and bringing all those resources together. It's fair to say we've got quite a few of those types of people across government at the moment, I would say, but we need more coming from a commercial investment perspective. So CE brokers, it's a brand new, I think, area. Ultimately assisting with finding capital resources or funding angles to commercialize. There's a great program out there called the Accelerating Commercialization Fund in Australia, which does a lot of amazing work. And there are a bunch of people that are facilitating, helping you sort of get through that program. And I think it's the equivalent for circular economy. So that was a term that was put to me in that question, but that's my answer on what I believe circular economy brokers are. So.
Great. And then just a question from Jonathan. He's asked, how do you quickly tell whether your potential investor can or will be the lead investor? And suggested investment size, engagement, or maybe are there some other factors? It's
really simple. You just ask the question. There's no way about, masquerading around it. John, you just need to ask the question, and it's that simple. Will you lead the round, and what will it take it to lead the round? There are various forms of investors out there, as we know. There are patient and there are active and they are happy to deploy. They're part of syndicates and so forth. You have to ask the question. It's very much similar to a trial sales close. You have to ask the question. And if you don't, you're doing yourself a disservice. It's as simple as that.
Perfect. That's a ninth untold truth. Great. Keep adding to the list. And then just, another question that came through in registrations was, you may have already touched on it, but how does one attract financial support when operating as a micro business?
That's a very broad question. Obviously,
whoever asked it, if people would like to, also the advantage of this setup is you can come off mute and show your face if anyone would like to add to that question or present any others too.
I'd love to talk to people versus blank screens. Nobody? There we go. So what was the question again, Caitlin?
They've just asked about, I had it right here, sorry, I've lost it. Attracting investment, financial support when operating as a micro business.
Micro business, I mean, what's a micro business? A micro business, could be a solo business, a person, some micro business could be a sole trader trying to do something. How do you attract investment? Well, I'm going to tell you a frank and honest truth from my point of view is that I, as an angel investor, don't invest in single founders anymore. I'll be straight up about it, and would never will going forward. That's a whole other parking that aside. A micro business, what potential does a micro business have to deliver value to an investor to realize a return? So one approach that may not be an approach that we didn't talk a lot about was to actually commit to a particular return on investment on funds that are going to be allocated. It could be $50,000, it might be $25,000, and it's not about creating a position for that investor to come in and actually take some equity in your organization, like 20% or 30% or 5%. That may not be the angle. What they are actually probably looking at is actually getting a return on their money, right? Might also be helping you succeed in achieving an impactful outcome in market, especially when it comes to circular economy. So, the way receiving capital as a micro business, sometimes I would say is much better to actually go out and actually find potential people that want to come and join you on that journey and ultimately provide a return on that capital, that has a particular possibly interest rate or a commitment that within 3 to 5 years time, you're going to, 3 times that money that they've contributed along that journey is probably a better approach to take than actually, giving away. I wouldn't say giving away, but, adding somebody to your share register brings a lot of complexity to the equation, and you can't easily remove people when it comes to those when it comes to that. So yeah, I would be thinking about just thinking about treating them as coming in as delivering a financial and impactful return to them over a period of time, than actually thinking about it in a startup. We're going to raise capital, dilute our shareholdings to raise the next round of money. So that's probably much more of a micro business, small business approach, I would say. And the other reality is that you could try and raise small business loan money in Australia, but that's non-existent unless you're paying 20% return on money, and if not more, and collateralizing a home that you might have, or an apartment, or a car, who knows what, right? But an asset. So
great, thank you for dealing with being put on the spot with that one. I didn't prepare you for that question. We've only got a couple of more minutes left, but if anyone would like to come off mute, have any more questions, take the floor, maybe if there's a particular experience you want to draw on or add to what Nick's talked about, opening the floor to everyone. Hi, Simona.
come on, guys.
Hello, Nick. Thank you very much for your talk. Very insightful. I have a question in regards to one of your last point when you say don't just do marketing to capture existing demand on one side and do more 60%, brand value development. But at the same time, you also said, and it's so true, how difficult it is, to do marketing in a field where you have behavioral change to deal with, and how costly and long term it is to build your audience. Can you elaborate more about this? Do you have any trick how to achieve it on a shoestring budget?
Yeah, I mean, the best way to drive that is, you got to accept it's going to take longer, right?
Yep.
Do not rush. It's going to take longer. The second is to actually try and bring a cohort of people that are missionaries on that journey, that actually most likely are customers that become, customers ultimately become brand advocates in what you're doing, and your natural long-term success is through word of mouth, right? As unfortunately, we get caught up in the trap of we got to do Facebook advertising and Instagram advertising and TikTok and all that stuff, and the reality is we need to basically have as many conversations in market to start building building an authentic voice in what you're doing, and not being afraid to do that. And lastly, I would say it's something that I've had a big challenge with as a person is selling my time, and I think that's one other area that is critically important, is that there's nothing wrong with actually rolling out a set of services that you can actually build out that supports your point of view, and finding similar organizations that are prepared to spend money to execute on the value that you want to build, and through that you build a strong collective of people and organizations that back and believe in what you're doing, and ultimately that brings long-term value for you in terms of your journey. So and actually have a really, really clear story and narrative. I'm a big believer, most of us circularity people are trying to, we don't say this enough, but we're trying to beat the enemy, right? and the enemy is the whole industrial complex, right? So taking on that whole thing is mega challenging. So we need to go up and say we want to go and take on this enemy here, and be quite open and transparent around it, and go after it. We Australians are a little bit more conservative in executing on that front, and some of the global north are a lot more stronger and in terms of voicing their opinion and thoughts on these things. And it's one thing that I'd like to see more of us in this part of the world become stronger at, is actually having clarity of voice and sharing our opinions and bringing people along on that journey to get onto that. And if it means that people spend money along the way to get you and to get profitable and therefore deploy capital in other areas, great.
Thank you.
Anyone else got any more questions at all? All right. Well, thank you everyone again for joining. I will unrecord everyone now. We'll be putting this up on our a YouTube channel just to be able to share the link with everyone, so you can watch this footage later on. If you have any questions you think of later that keep you up at night, send them through, and I'm sure to connect you with Nick so he can answer those. We'll also share through the links now to register for our next webinar that's coming on the 2nd of March. So thanks everyone for joining. Love to see you, and we'll see you next time.